Good afternoon.
Hello and welcome to InstаФорекс Economic News TV channel with us, Anna Kasatkina
and Ekaterina Stikhina.
You are watching the currency and commodity market review for the previous week.
What changes took place in the global currency arena?
The Japanese yen posted heavy losses against the US dollar.
And what underpinned the overall bearish sentiment of investors?
The yen was sliding amid market speculation that the Bank of Japan may continue on its monetary easing path and announce further policy loosening measures after the upcoming board meeting. The Bank of Japan's decision on interest rates will be closely watched on Thursday. On Friday afternoon, the USD GPI pair closed the weekly trading session at 111.72, the highest mark since April 4th. For the week, the major printed a price of 2.71%, equal to 3.5 yen. The Japanese yen was also trading on a weaker footing versus the single European currency. The Euro GPI pair climbed to 225.40 levels in late trades, logging a weekly gain of 2.18%. The yen fell after it was reported that the Bank of Japan is considering negative interest rates on loans for financial institutions. Earlier this month, the Japanese yen surged to its 11-month highs against the US dollar amid expectations that the country's central bank will not take any actions to drive the value of the national currency lower in the short term. The demand for the American dollar remains buoyant as market players assume that the US Federal Reserve is likely to lift its interest rates earlier than anticipated. The US dollar index, which measures the greenback strength against a basket of 6 major currencies, advanced to 95.11. The index was up 0.41% for the week after an increase of 0.47% recorded during the previous week. The euro also gave ground to the US dollar. The euro USD pair dropped to the level of 1.1223. The euro dived by 0.53% on the week, staying in a steady bearish trend for 2 weeks in a row. That was all about exchange rate movements in the currency market.
Thank you for the currency pair overview, Ekaterina.
You're welcome. And what sentiment prevailed on commodity market?
Well, oil was edging higher while gold was heading downwards during the week.
And what determined the direction of the prices?
Oil was broadly supported by the hopes that the gap between supply and demand in the global market could finally be reduced. At the same time, gold prices were weighed down by the stronger US dollar. Oil prices climbed high on Friday, extending gains and adding 2% for a third consecutive weekly session, as market participants expect that a healthy balance between supply and demand can be gradually achieved. Brent crude oil futures for June delivery went up to $45.07 per barrel, while June contracts for West Texas Intermediate also increased, landing at $44.22 per barrel. However, a number of analysts have warned that it would take quite a long time for the oil market to reach a balanced state. Meanwhile, gold prices sank on the back of the US dollar's appreciation, along with market expectations that the Federal Reserve will raise its interest rates ahead of schedule this year. On the COMEX division of the New York Mercantile Exchange, gold futures for June settlement closed at $1,235.10 per troy ounce, shedding 1.22%. For the entire week, the yellow metal was lower by 0.31%. Even though gold has currently slowed the pace of its advance, the commodity is still demonstrating growth of almost 17% since the beginning of the year.
Anna, thank you for the commodity market review.
You're welcome, Ekaterina.
You have been watching the weekly currency and commodity market review on ИнстаФорекс TV.
It was presented to you by Ekaterina Stikhina
and Anna Kasatkina.
Have a great day. See you.
Goodbye.